Hello, everyone, and welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining us for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here's some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, everyone. Welcome to a new week. We're officially well into summer. It is June, and therefore Coinbase has announced that they are doing on-chain summer, and are going to be running plenty of um, uh, campaigns and promotions around using their chain base. And I'm sure we'll see more of that in the future. Some other fun news: Galaxy yesterday announced that they're going to be tokenizing a 300-year-old Stradivarius violin worth $9 million. Also, very cool if you want to own partial interest in something like that. But that's kind of all we got on the random news front. But I've got some tokens for you all today. So first, we're going to start by talking about Gnosis. So Gnosis, if you recall, they started off, they're a 2017-2016 project. They are known for having prediction markets, and they are responsible for creating the Safe Wallet and Cal protocol, both of which have been spun out into their own product lines. So this week, they decided that they are putting out a vote to execute a buyback of their GNO token at book value. So despite having all these business lines, including their own chain, Gnosis Chain, their governance token GNO is trading at 48% below the value of their treasury, with some of the assumptions around these, the treasury value being attributed to venture positions and LP positions and other funds. So this proposal is basically recommending that the project buy back $30 million of tokens using treasury assets, which represents about 5% of the total treasury value, until the token is brought back to book value. The proposal is up for an initial snapshot vote and is going to end Monday. And currently, it looks like it should pass. So that will be an interesting one to keep an eye on. Despite this news, doesn't look like the market's really reacted much to it. It is down 2.2% for the week. All right, next up, we'll talk about Maple Finance. So last week, Maple Finance, which is an on-chain lending protocol, they launched a new institutional DeFi product called Syrup. So the protocol basically enables users to deposit USDC, which is then lent out as part of a secured loan to institutional investors in crypto. The idea is that they're doing kind of more secured loans using digital assets as collateral for those loans, but it's allowing retail investors to kind of access that investment class of credit. So Maple is going to further also integrate Syrup into DeFi applications, and basically promoting like what's called their Syrup USDC LP token, which you can think of as like the IOU token that you get when you deposit USDC as part of that loan. So finally, Maple also announced that they're planning to replace their MPL token with a token called Syrup later this year. And they're going to run a drip campaign for users to earn Syrup tokens by participating in the new protocol. So interesting news. This project has definitely done well riding the real world asset narrative wave. And it is up 14% for the week on this news. All right, next we're going to talk about Arweave. So last week, Arweave, which is a decentralized data permanence project, announced the launch of a token for its newest protocol called AO. So the AO token is going to replicate Bitcoin's supply schedule and fair launch ethos, supposedly. Users can earn new AO tokens by holding AR in their wallet, bridging tokens to AO, or building on AO. AO is designed as a scalable smart contract execution layer for Arweave's layer one solution. So that's like a mouthful, but basic way of what that means is that Arweave, their architecture is kind of more designed around giving data permanence for in an on-chain manner, versus having like an execution layer that allows you to have the smart contracts, right? The if-then statements, which is basically natively built into like Ethereum and a lot of L1s. So AO is going to be this like this layer on top of Arweave that's going to use Arweave's data permanence, but basically offer transactions and applications much more scale, faster speeds, lower costs. So the design is actually really, if you're very technically in the weeds on this stuff, it's actually like really different from other smart contract platforms. But the hope is that it can be used in a lot of applications such as AI, where they need kind of these like super fast speeds, parallel execution, and the likes. So we will see how that goes when they roll out. That is coming on June 13th. Arweave is up 15% on the week on this news. Okay, last up we have Stargate. So Stargate, which is the bridge built by Layer Zero, launched its version 2 last week. The V2 introduces something called Hydra chains, which they're essentially like these additional integrations that basically give Stargate the ability to integrate with a lot more chains. This also should result in lower bridging costs, as transactions can be batched into kind of like one transaction instead of having to be done separately. Layer Zero, which serves as the messaging rails for inter-blockchain communication and for Stargate, has hinted that their token is going to be released very soon. Stargate is up 32% on the week. All right, you guys, that's all I have for you this week. Thanks for joining. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token price.